Hello, investors and future investors. Welcome to the channel. For today's video, I'm going to give you one stock that shows extremely good buying signals. I'm going to show you my intentions of how to get this stock back into my portfolio and be able to use it to make consistent income. Now, if you're new to option trading or you're trying to use options in order for you to make that extra income, in order for you to supplement your 9 to 5, then you happen to stumble onto the right channel. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you some extremely strong buy signals of this one stock. I'm going to show you the strategies I'm going to be using in order to get this stock in my portfolio and also go ahead to use this stock to make consistent income over time so I could grow my portfolio. Now, before we get into this video, I want to ask you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. And favor number two, always make sure you have an exit strategy before entering any options trade. Now, for today's video, we're going to be using none other than the Trade Desk ticker TTD. Now, the Trade Desk is a very interesting stock. It's an advertising technology stock. I did trade this stock back in 2021. I did several cover calls on it, and once it hit the $80 strike price, I absolutely stopped trading it because I think it was too high. Now that the stock has come back to reality, I'm trying to get it back into my portfolio, but I want to make some income until that happens. So this is what I'm going to do. So before we get into the strategies I'm going to be using, let me just show you the strong buy signals in which I use in order to make this determination. And for that, let's go ahead and get into the Robinhood Advanced feature. And that's going to be right here, the part that says Advanced. So now this is open. What we're going to be doing, we're going to be going over to the 1 year mark, which is representative up here as 1Y. Now, what I want you to pay attention to is the blue line right here. Now, this blue line right here is what's known as the MA200 or the 200-day moving average, as you can see to the left of your screen here. Now, with the 200-day moving average, this is one of the indicators I use in order for me to make a decision what stocks to get into and what option strategies to use. Now, to say the current share price is trading below the 200-day moving average is a major understatement. As you can see to the top left here, the current share price is $56.60. But that is way below the 200-day moving average, which is about $108. So that right there is an extremely strong buy signal. Now, before you do anything, every smart investor knows this for sure. You never use one signal in order for you to make a decision. That being said, let's go ahead. I'm going to show you a secondary signal that I use before making a decision to get into any options for stocks. And for that, we're going to go to stockcharts.com. Now, I've already pulled up the TTD chart right here. Now, for those of you who are not familiar, this is stockcharts.com. This is literally a free resource you can use. The reason why I use it is because the charts look way better on this than other platforms that I have used. So let's go ahead and we're going to go down and we're going to check out the secondary indicator that shows a very strong buy. And that's going to be the RSI you could see right here. The RSI stands for Relative Strength Index. The RSI is what's known as a momentum indicator. The RSI gives us a measurement from 0 all the way up to 100. But what we investors and traders focus on is the movement between the 30 and also the 70. Any stock price that goes towards the 70 mark, the closer you get to the 70 mark, it tells us that a stock has been overbought. And the reverse to that is going to be any stock that goes closer to the 30 mark you can see down here, representative of the stock is being oversold. Now, that being said, look at how beautiful this stock is. This stock is oversold and this stock has gapped down tremendously. Now, this is where I love to see, especially on a good stock on Trade Desk. Now, I think Trade Desk is a good stock. Just remember, do your own due diligence. You might come up with a different conclusion. Now, let's get back over to Robinhood, and I'm going to give you a bit more information on the Trade Desk. Now, the Trade Desk, like I mentioned earlier, is a marketing technology firm. The Trade Desk has been hit with what's known as a trifactor, and that is why the stock price is where it is right now. Now, that trifactor is going to be that they got a class action lawsuit. That's number one. The next trifactor is that they delayed a certain software, and because of that, the earnings were not as strong as they previously anticipated. Number two. Now, here's the trifactor. Those two factors come together, and TTD trading a bear market absolutely tanked this stock, and that's why you see that huge gap down in the stock. But that does not worry me because I did my own due diligence and I know this is a stock I want to get into. So these are the strategies I'm going to use to add the stock back to my portfolio. And for that, we're going to go down to trade TTD options to the bottom, and that's going to help us open up the option chain. Now, this entire area down here is known as the option chain, and the option chain helps us to make a more informed decision. Now, for this first strategy, I'm going to use on the trade desk, I'm going to go to sell and I'm going to go to put. I'm going to go ahead and choose the strike date of March 28th, which gives me 11 days to expiration. Now I'm going to go ahead and I'm going to choose a strike price below the current share price. And once again, the current share price is $56.60. I will be going with the $54 strike price. As you can see, top strike price to the top here. And for that, I'm going to be receiving some money. The money I'm going to be receiving is going to be $1.08. Now, $1.08 in the real world actually is $108. And that is because each option contract multiplies by 100 shares. So you simply multiply 1.08 by 100, and that's going to give you $108. Let's go ahead and click into that and let's see the result. So the result of this first strategy that I will be using to get back trade desk into my portfolio is going to be the cash secured put. Now, as I just demonstrated, with the cash secured put, you're able to make consistent income until the share price right here actually hits the strike price you chose, which in this case was $54. So here's how this is going to work out. I'm going to keep doing a cash secured put until I am assigned. Now, assignment means that at any point in time where this share price here hits this $54 share price, I will now be forced to buy 100 shares at $54 per share, which is going to amount to $5,400. So that is number one strategy I'm going to be using in order to get TTD back in my portfolio based on those two strong buy signals. Now let's go ahead and get into the second option strategy. And before we do that, so if you guys are liking the video so far, go ahead and like the video, subscribe to the channel, and most importantly, share this video with someone that could benefit from its content. On this channel, we focus on growing small account portfolio consistently over time while using safe option strategies. If this sounds like something you'd be interested in, then check out the links in the description below. Now, our secondary strategy that I will be using in order to get TTD back in my portfolio, for that we're going to go to buy and we're going to go to call. And now I'm going to go ahead and choose the expiration date. The expiration date for this option strategy, I'm going to go ahead and use the January 16th, 2026, which now gives me 305 days to expiration. Once again, with this option strategy, although it is different, I'm still going to go ahead and choose my strike price below the current share price. And I will be going with the $50 strike price right here. Now, with the $50 strike price, I'm going to be getting a 0.71 delta. Delta is very important with this option strategy. In addition to the $50 strike price and my 0.71 delta, I will have to pay some kind of money. The amount I'll have to pay is 16.15, or as we just discussed, in real life, that's going to be $1,625. The reason we're going to have to pay is because now we get involved in a buy strategy, which is the buy call. And once you're buying, you have to pay. Let's go ahead and click into it. This new option strategy is known as a long call or a leaps option. Now, what the leaps option do, the leaps option is a bullet option strategy that gives you a far out expiration date. Once you decide to get into a long call or a leaps option, you're of the mindset that this stock is going to appreciate in value over time. And that's why my secondary strategy to get the stock into my portfolio is going to be a leaps option. Now, what am I going to do now that I have the leaps option in my portfolio? Well, the first thing I could do is do nothing. Once again, the whole point of buying this is to wait until the stock appreciates in value. You're going to close out your options and you're going to lock in those investment gains. The other strategy you can do is to go ahead and do what's called selling covered calls. Let me show you real quickly how to do that. Now, once you have that leaps option, you're now going to go to sell and call, but this time around, you're going to choose a closer option strike date. Let's go with March 28th. Now, we're going to go ahead. I'm going to choose my strike price above the share price for this instance, and I'm going to be going with let's go with the $64 strike price, which gives me a 91% chance of profit, which also gives me a 10% chance that this trade is going to go against me. Now, for that, I'm also going to receive some form of compensation, and that compensation is going to be 0.24. Once again, that's going to be equal to $24. The reason I'm getting some kind of compensation is because now I'll be selling something. So let's go ahead and click into that. And this here is going to be the covered call option strategy. Whenever you are able to acquire a leaps in your portfolio, and you then go ahead and use the leaps option in order to sell consistent cover calls, in order to generate consistent income, that new option strategy is known as the PMCC, or the poor man's covered call. Now, I want you to keep this in mind. As you can see here, I could choose any strike price down here and receive a lot more money. I did go ahead and choose an extremely high chance of profitability, and the reason for that is that do not forget what the focus of buying a leaps option is. Once again, the whole point of buying a leaps option is for you to be able to wait it out until the stock appreciates in value. If you were to choose a lower strike price, then the chances of the stock hitting that price is a lot more likely. So have patience, make the small amount of money right now in order for you to get those huge investment gains coming to the end of the contract. So to summarize, the trade desk is a very good marketing firm. The trade desk has showed me two strong buy signals in which I intend to capitalize on these signals by using two option strategies. The first strategy I'm going to be using is going to be the cash secured put in order to get the trade desk in my portfolio for a cheaper price. The reason I decided to use this strategy is because I don't know if it's going to continue going down or whether it's going to retrace and go back up. The second option strategy I will be using is going to be a leaps option strategy. I'm going to keep the leaps option strategy with the intent that the share price is going to go up over time, and my option is going to go up over time, where I could then sell it and lock in my investment gains. If that is not enough for you or for me, then you could go ahead and use your leaps in order to sell consistent cover call and make some small premium as you wait for the stock to appreciate in value. And that is how you use buy signals in order to make a decision on what options you're going to put in your portfolio. Now, for those of you who have made it to the end of the video, go ahead, like the video, subscribe to the channel, and very important, share the video with someone trying to grow a small accounts portfolio. Once again, if you do need help growing a small accounts portfolio, check out the links in the description below and go ahead and join the weekly income team. And until the next video, keep pushing your investments.